Okay, welcome to tonight's chart focus. Gonna have a look at something different tonight, and that's how I tend to look at Fibonaccis from time to time on charts to identify possible pullback levels and even use as targets on any bounces. Please first pause this video and read the disclaimer. Okay, firstly let's have a quick look at the XJO though. Certainly looks toppy. They were starting to get three pretty ugly candles there for a while today, and it was certainly shaped up to be that way. Three red candles was fairly decent tails. Markets tried and failed to be able to kick on three occasions. Actually got higher there for a while this morning, but died off. Broke yesterday's low, which is a bit of a concern. Not the day before though, and really haven't got too far down into this really strong candle, which was the one that broke the 200 EMA. So quite a few people are expecting a dip. We may well get one. Well, ideally, just back to this 200 EMA line, retest that. Previous resistance becomes support, and off we go again. But who knows? And as I keep saying, like a broken record, I'll just trade it as I see it rather than wasting time trying to predict it. Right. So what I'm gonna do first is have a look at a couple of charts that have bounced and see whether the fibs could have given us any indication of picking up a dip. Right, so this first one's MAD, Maverick Drilling. Chart's gone absolutely gangbusters since January or so. 20 cents odd breakout of that tight range, and now it's at $1.40, so nice 7-bagger. Let's say we could have picked up some possible areas of bounce here. So what I'm going to do is run the fibs first from this breakout candle up to that high. Then I don't think we'll get anywhere near picking that one up. As you can see, it didn't even get close. The further away from that 38 fib that it bounces, the stronger I consider it being for a start. So that's a really strong sign. So what we could do next time is we'll pull this bottom up to the next low, which was about there. That's that point there, and that starts to sort of become in play. So I tend to look at this as a zone, the 38 to 62. Like anything on charts, I never look at anything as an exact science. It's just a bit of a zone to be wary of. If there's enough other people using fibs, then obviously they'll be looking at these same numbers, and that's why I tend to look at them. I don't really think the fibs in themselves have any kind of magic potion meaning or anything like that, but you get enough people look at them and they can become self-fulfilling. Okay, so as you can see, it actually did hit the 38 there. What I'd be looking at once it did hit is probably a break of the candle before for an entry, which means I'd most possibly be in on that day there. Depending on your time here, I'm obviously a relatively short-term trader as a rule, but if I was giving this a chance on a daily trend and I entered on that swing there, I'd either, if I was very tight, I'd leave my stop there, but I might also use these fibs as a potential method for setting a stop on the way out. So I might want to actually set a stop just down under here, under the 62, which is giving it a good amount of space, but also letting it bounce off some technically relevant levels. And like that point there, the resistance there might even become support. So that obviously I'd take a much smaller position because I'm giving stuff a much wider berth. So I'd use a position size calculator if you had one, or I tend to do these things in my head, but yeah, I'd be obviously taking a much smaller position if I was giving it more room. But I do tend from time to time look at these fibs and maybe even plan to take a smaller size here if it works well and good, but add down here and then work out the stops based on the two. And then you can actually even use this as some potential targets. So the stock is trending really strongly. We might actually get this repeated range, and as you can see, 50 pretty much pulled up that first really strong run. So it's hit the 50% of that run there and dipped back down. And the hundreds pretty much copped the bottom of that gap. So both of those targets would have been hit really nicely if you use them as targets. I don't exit straight out on a target. I tend to give things a bit of a trailing stop once they do hit a target to try and maximize profits. May try to actually ease out of them once they've hit a target as they keep going up, ease a little bit out of the target on first weakness and then try and phase out as it goes higher. Okay, so that's mad on the daily. Let's see if I can have a look on maybe something like an hourly and see if we can even get a shorter term entry. Okay, so I'll just pull the fibs back up on it. So if we've taken, let's say, this low here, and here somewhere, up to that high. Look at that, straight off the 50 there. 50 actually happened to be previous resistance as well. So a fairly obvious spot for it to look to bounce. Would either get in on that candle there or wait for confirmation with a break of that. So I don't have any hard fast rules as to where I get in and into these things. I'd like to certainly see it break the high of the candle before. I may sometimes give it 2 candles depending on the state of the market at the time. But again, I'd certainly be looking for a bounce within that time frame there. Got the bounce, and let's see if we've got some targets. Obviously the 50 is the first target, gapped up through the 50, got pulled up basically by the 62s there, and then gapped up above the 1 as well, but looks to have come back, which was pretty similar to what we were looking at on the daily. So they can certainly give you a little bit of a rough clue as to where they might bounce to, all going well. Alright, so that's just a bit of an idea on MAD. I've already used 6 minutes on one example, so it wasn't the plan. Let's just have a look at a couple that have been super strong and that are dipping. Probably the stock of the week last week was PLA. There's that chart. It was in that beautiful downtrend, a little bit of consolidation, and then once it broke off it went. So a great run from about the 6-cent mark on the break right through to 18 or 19 cents. Let's go to an hourly chart of that and we'll run the fibs on that one. So I'd run it maybe from that little low there right up to the high. Okay, so it's hit the 38, and look at that, it's bounced off it actually 2 or 3 times, so it's wanted to break there, hasn't been able to break that candle, so no entry really there, and now it's sort of noodling around here. This purple line's a 5-day moving average, so it's hovering around there as well, but it's certainly in a potential buy zone for me. Now if there's more weakness tomorrow, certainly this 12.5 would come into play for me, but what I'm looking at anywhere in this zone now is signs of that swing. So like I said, this is the hourly. The obvious point at the moment where it looks like there was some pretty stiff res was at 14.5, but if it noodles down here then starts to swing, I may actually take the first position there with a stop under the low, or again I'll take a small position and try and give it a bit more space. A lot will depend on the volume as well. I'd like to see this volume increase on the on any bounce. Obviously at the moment there's been a little bit of decrease in the last 4 or 5 hours dip, which is what I'd want to see. Let's just go back to the daily for a minute. Volume was actually up today, so still plenty of selling there. You may see a little bit more before it starts to dry up and we get a bounce. Again, another obvious position that I'd be looking at is just the top of that candle there, which is 11.5. That may cause provide some support on the way back down. So yeah, so we'll go back to the hourly again, throw those fibs back on. Pardon me. Okay, now what we could do is we'll delete those fibs. We could even run them on, let's say the bottom is there. Let's say that's the bottom's in. Might even use that as a few potential targets on the way back up. So 15.5 to 16.5 might be the first area that if it does form a lower high and actually starts dipping again, that may be a first target which I'd possibly look to lock some in on. All going well, obviously, that's if I get a good entry and it starts to bounce nicely. If it starts to find some resistance here, I might actually knock some off there. If it powers on, breaks this, I'd be even possibly looking for first that 50% range, 13 to 16, 3 cents, or the 100% range, 6 cents on top of here. So you're looking at 22 all the way up to 25. But there are lots of ifs and just an idea of what I would tend to look for. Alright, we'll do one more chart. I've already been rambling on for 10 minutes. Another one that's dipped a fair bit is NWE. Pardon me. So there's the hourly. Let's have a look at the daily for a start. Okay, so nice big gap down here. I can't imagine it getting filled, but who knows. Volume's kicked in on that gap there. Drifting away in these last 4 or 5 sessions, which is exactly what we'd like to see. Okay, let's go to the hourly. That should be able to have that hold. There's that gap there, I think. I'll go back and check. That's a dip to 5, gapped up to about 5.6. Is that it? Yes, it is. Okay. Alright, so we'll run it on the hourly. As I said, there's no real hard and fast rules on these fibs, so you might want to run it from before the gap up, you might want to run it from the low there, but I'll just tend to run it from there for a start. See how we're looking. Okay, so it's in that range now. Just gone through the 38, the 50, and look at, just to give you an idea of those repeating ranges, from there to that support there is exactly half of where it actually eventually got to. So it's the range, even though it got higher than that, the actual support level there was halfway to where it eventually bounced, ran to first time. So this 50 may end up being the key, seeing it was such strong support there. It's not too far away, it's about 6, 7, somewhere like that. What we might do is just move this one up to the bottom of that, just to give you a comparison. Look at that, right now we are right on the 50, and it did actually bounce off the 38. So tried to bounce off the 38, couldn't really kick on. Now it's testing the 50. That little bit of volume looks like it was actually on the dip, so the sell-offs have still got a little bit of volume in them. I'd ideally love to see, if it can't hold here, I'd ideally love to see this one here hold and look for an entry there. But again, if we get some consolidation here in a little start of a swing, I might take a half size entry there with the intention to take another entry down here if it looks to bounce off the 62 fib, and position size and stop accordingly somewhere under that. I certainly wouldn't give it too much more room under there, so my stop would be pretty tight from there, spread obviously over those 2 entries. I suppose if you wanted, you could do exactly the same thing and run the fibs just from this little range here. Let's assume that's the bottom to get a few possible ideas for a bounce. Obviously the 50 around 8 looks to be the obvious spot. Hit 9, dip to 7, you'd think 8 could certainly be the first area to worry about. If it does power on, that 2 cent range added onto the top, 11 could possibly be a target, but there are lots of fibs there. Alright, that'll do for tonight. I just thought I'd talk about fibs for something different. Thanks.